Oh no, I've got a very big unexpected bill. How am I going to pay this $2,500 bill? Never mind, I can pay this $2,500 bill, and all it'll cost from you is basically all of your future earnings, and you have to spend the rest of your life living as a peasant. Wow, thanks pinball money magician. I really appreciate that. What a great deal. That's right, today we're going to be talking about payday lenders. So you may have gotten yourself into a bit of a financial tight spot, or you can see a bit of a financial tight spot coming up, and you're wondering whether payday lending is a good strategy for getting you through this hard time. And I'm also going to outline some other options which would actually be much preferable to considering a payday lender. So I'm not going to directly name any of these companies, as I'm not much of a legal expert and I don't have a team of lawyers at my disposal. But I'm sure you've seen ads that are very similar to this, where they propose that you can use the payday lending to pay for a holiday or pay for a replacement of a broken appliance. But this is a big trap. Avoid payday lenders however you can. And don't worry, there are preferable options to get short-term loans that do not involve payday lending. It is a very predatory industry. And why are payday loans such a bad idea? Well, I'll talk about the most obvious factor first, the interest rate. So right now, mortgages are roughly about 3%, car loans are approximately 7.5%, and credit cards are approximately about 20 to 25%. But payday loans, they are pushing 48%. And there are some smaller payday companies that are actually charging 65%. And even with that 48% interest rate, there's sometimes sneaky fees on top of that. And also, as a disclaimer, they actually refer to it as an annual percentage rate rather than an interest rate. But for all intents and purposes, it is basically the exact same thing. And you may be thinking, but this is Australia, or this is whatever country I'm from, and things are highly regulated and highly controlled. Well, yes, this is the case. But in Australia, for the regulation around lending, there are some massive loopholes that go around short-term lending. If a loan is designed to be lasting less than a month, even if it lasts longer than that, it actually fits through many regulatory loopholes, and therefore is barely even policed or regulated. So I went to the website of the first company that I was going to look at. Let's just say I'll call them Pinball. Now, for a $2,500 loan, and let's just assume that it took me a year to pay it back, I would have paid $1,195 in interest, and then on top of that, I would have paid a $400 establishment fee for the loan itself. So that adds up to an overall rate of about 65%. Or for a $2,500 example, you'll have to pay back $4,095. So you're receiving $2,500 from them, but you have to give back just over $4,000. I mean, this is a huge difference, and all they're offering is just time convenience. And this is assuming that you actually make all the payments on time. If you miss any payments, guess what? There's a $15 penalty for every time you miss a payment. Okay, so I ran those numbers through one of the websites, but that could just be a bad apple, right? Or let's try another apple. This one could sound something like Money Magician. So let's just say we need to borrow $2,500, and let's see what it'll cost us. And so all up in interest, you'll be paying approximately $1,195 in interest alone. And so that makes a total cost of $3,695. So it's still horrible, but at least it's better than their competitor. But I've got an urgent bill, so what can I do instead in order to get money quickly, which I don't have? That is an excellent question. The cost of living is skyrocketing in Australia, as it is in many developed and developing countries. And our pays, unfortunately, are not rocketing with it. In fact, they're totally stagnant, while all of our expenses are going up. So a lot of us are under a lot of financial hardship right now. So what are our options if you are unable to pay an urgent bill? Well, this first thing's pretty common sense, but prevention is obviously always better than the cure. So if you're not currently facing a financial emergency, I urge you to please try and save a $5,000 emergency cash fund. Do whatever it takes to get this. Whether you need to sell all your items on Gumtree or Facebook Marketplace, or whether you need to downgrade your car or downgrade your appliances, just sell stuff, and so you basically actually have an emergency cash fund. But if you're watching this video, you may already be in the situation where it's too late to actually build up an emergency cash fund, but at least that's something you can strive for the future. So anyway, here are 4 options that are better than payday lending if you happen to be short on money. Option number 1, Centrelink. If you're earning less than $45,000 per year, you can actually apply for an interest-free loan. And I know it's not the most fun thing in the world to walk into a Centrelink office, but it's better to pay no interest than it is to pay 48% interest. Option number 2, and just to be clear, I absolutely hate this option, but it's still preferable to payday lending, and that is credit cards. And the only reason that I recommend credit cards over payday lending is that the interest rates are usually between 20 to 25%, whereas payday lenders charge about 48%. Option number 3 is Afterpay. And yes, so many people are using it right now. And yes, it is true that there's zero interest to pay if you're able to pay it within 7 days. However, it is highly unlikely that you'll be able to do this. And if you do happen to fail to do this, the interest rate is 25%. And option number 4, again, I don't really like this option either, is to inquire if the retailer has some kind of pay later scheme that's going on. They may even charge an interest rate that is lower than the other options. However, upon finding out what the interest rate is, you can then analyze whether this is actually a better choice or a worse choice than payday lending, credit cards, or Afterpay. And again, with the 4 choices, all of them are horrible choices that you have to make, but they're all still better than payday lenders. As I said before, prevention is always better than the cure. Anyway, thanks for your time, and I really hope this video helped you out of your sticky situation. And as per usual that everyone else says at the end of the YouTube videos, don't forget to, well, you know the drill.